If you're serious about trading using price action, then understanding candlestick is one of the most important skills that you need. And in this video, I am going to explain to you exactly what a candlestick is and how you can use it to actually know where the market is headed. If you're new to the channel, subscribe. Let's do this. All right. So candlestick are just these symbols that you see on the charts. Most people don't understand what information that single candle is telling you. So first things first, we need to understand what a candlestick does. So a candlestick usually tells you the price or the direction of the price at a specific time or a specific period. Think about 15 minutes, for example. If you look at your charts, you will see here we have 5-minute time frame, 10-minute, 15-minute. It just means that that single candle is representing the price action between that period. So you know exactly what price did from the moment that period opened to when that period closed. Now, another thing you need to understand is the structure of a candlestick. So a bullish candle has what we call an open, and an open is down here. Remember, we are going up. So if we are going up, we want to see the open down, then price pushes up. But before price goes up, it creates what we call a low. Now, a low is the lowest point price reached during that period. And you will see the low represented as a pin most of the time, because that means at some time the candle was down here. So the candle was bearish, but the buyers pushed the candle up and then it created now that low. Then price went up to this level. Then the sellers pushed that market down here. So the highest point price reached, that is the high. And then once the time ends, so if it's 15 minutes, after 15 minutes, the candle closes. So where the candle closes is where the time got finished. And that is where we have the close. And that is now for a bullish candle. A bearish candle is just the opposite, but you need to keep in mind that the high and the low never changes. The high, in definition, the high is the highest point price reached in that period, and the low is the lowest point price reached in that period. And so that means that even on a bearish candle, the high is still the high and the low is still the low. So let's color it red to represent price going down. Now, so that means that this is the high here, and then we have the low. Now, what really differentiates a bullish candle and a bearish candle is the open and the close. A bullish candle opens lower and closes higher, which means that price pushed higher. And a bearish candle opens higher, so it opens up and then it's pushed down. So it means it closes lower, meaning that price went to the low. Simple, so open and close. So how exactly do we use this information to start now applying it to the charts? All right, another thing you need to know is that consecutive bullish candles, you can imagine them as just continuous price going up. For example, if you look at these three candles here, it means that we have one bullish candle, another bullish candle, another bullish candle. So that means that if you look at that on a line graph, it means that just price went up. And then this red candle here, it means that price went down. Now, this is where a lot of people get confused, or not really confused, they just get lazy, because when you are looking at the charts, you are not paying attention to each individual candle. And there's no reason why you should not pay attention to each individual candle. They are forming for a reason. Now, another thing you need to know is whether a candle is big or small. If it's blue, it means it's bullish. For example, this is where this is another area where people get confused. So just because this candle is small, you ignore it. Why would you ignore it? It means that price went higher. Even though it went a little bit higher, price went higher. And so if you are plotting the price movement, you'll notice that now price went up, these 3 candles, and then this red candle, it means price went down, and then these 2 candles, price went up. All right, so that is how you apply candlesticks that are consecutive to give you one continuous line, which is just telling you that in that period, we had very strong bullish momentum. Now, another thing you need to know is how price moves. Usually, if price is going higher, it will create a low and a high, like that. So we have a low here, and then we have a high. And then we have a higher low, so let's use abbreviation, higher low, and then higher high. Now, in reality, when we are using this illustration, it's very easy to spot the low, the high, higher low, higher high. But what if you look at the candles? This is where people get confused. So let's use an illustration. So we will use bullish candles, 2 bullish candles to create this move. So this line here are these 2 candles. And then this low here, we will use 2 bearish candles. So let's use that, like that. And then this move here, we will use 2 bullish candles, like that. Now, this is where you need to know the difference between a high and a low. So let's color this one red to differentiate the candles. Now, the only way this becomes a low is when we have created this bullish candle. If this bullish candle is not there, then you don't have a low, because how do you know that price is going to turn the direction there? Price might continue going down. So you see this movement. Price went up, so price went up. Then this movement, price went down, price went down. Now, price went up again, like that. So the only time this becomes a low is when we have a bullish candle next to the bearish candles. Now, again, the only time this becomes a higher high is when we have a bearish candle. So this is not a high yet. The only time it will become a high is when we have a bearish candle. Now we know that this was the highest point price reached in that period. Then we saw a reversal. So even if it's a small reversal, another thing, even if it's one candle, it can be a low. You see, if price continues higher and gives you a bullish candle like that, then that means that you have a new low here. This one candle is your low, and then you continue higher. So remember, now this is not our high, because the high will only become a high once you have a bearish candle. So it is very, very important for you to pay attention to each and every candle so that you know the price movement. So let's look at some live examples from the charts to see now the price movement. Now, if we use the example of EuroCAD, let's delete everything and just start from the open of the day. So this line here represents the open of the day. So these 3 candles going up, it means that price went up. These 2 candles, price went down. Price went up, 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 price went down. This one candle is up, down, one candle up, down, 3 candles up, one candle down, 3 candles up, one candles down. Like, that is exactly how you should be analyzing your charts so that you see the price movement. Now, once you see the price movement, it's very easy now to start anticipating the next move, because you can see where the volume is, you can see if price is creating higher highs or higher lows, if we are creating a trend, if we are in a ranging market. And speaking of price movement, price will always do three things. Number one, price will go in an uptrend like that. So we create a series of higher highs and higher lows. Or we will stay in a trading range. And a trading range is just price going or oscillating between a high and a low. It's not breaking out, it's just staying within a box like that. And then we can have a downtrend where we have a series of lower highs and lower lows. How would you know we are in a trend if you don't know how to interpret the candles? So this is part one of candles, and your homework now is to go back and just look at the candlesticks and look at the price movement. Also, check out the free masterclass, link will be in the description.